Building wealth may not be easy, but it is simple. And if you want to build a significant amount of wealth in a short period of time, it requires knowing the formula. And I'm going to show you what this freedom formula is so that you know exactly the steps that you need to take to be able to retire a millionaire at any age. If you don't know who I am, my name is Joe Brown. I am a former stockbroker who spent years advising the top 1% on how to manage their wealth. And then after I made enough money to leave that corporate world behind, I started Heresy Financial, where I now teach people financial strategies that exist outside the mainstream, things you'd never hear from your typical financial advisor. Case in point, what we're talking about today, if you go ask a financial advisor what you need to be able to do to retire a millionaire, they're going to give you the 40-year plan. They're going to say put 10 to 15% into your 401k, keep your high interest rate debt at a minimum, and above all else, make sure you have them manage your money for you so they can take 2% of your wealth every year. That is not the plan that we are going to be talking about today. We are going to be looking at much shorter, much more aggressive time periods and the exact math on exactly what you need to do in order to get there. So first, let's look at the formula. The formula is time left times growth rate times annual addition equals freedom number. And yes, this might sound confusing. Don't worry, we're going to break all this down. I'm going to give you a bunch of tips and tricks in order to help you out with this along the way. We're also going to run through some calculations to look at what this looks like in the real world for you based on the time frame that you are looking at. So first, let's break down the formula and let's take a look at time left. This is very simply the amount of time that you have to invest before you start taking money from the pile of wealth that you've built. Now, this variable you have the least amount of control over compared to the other variables in this formula. And that's because if you're currently 65 or 70, you don't have the option to say, hey, I'd rather wait 30 or 40 years before I start taking money from the pile of wealth that I've built. You might have to start taking money from it in 5 years or maybe max 10 years. However, if you are young, you do have the privilege of saying, hey, I'd like to stretch this out over a longer time period, or you have the option to try and shoot for it in a shorter, more aggressive time frame as well. But either way, the longer time you give yourself to invest, the easier it is going to be. The shorter you compress that target goal into, the more difficult it's going to be, but it's not impossible. So the time left portion of this formula is simply the amount of time you are giving yourself to add to your investments before you start withdrawing from them. The next portion of the formula here is the growth rate. Now, what I'm going to say here, many people are probably going to disagree with me on, but no matter what I say here, people would probably disagree because everybody has very strong opinions about what you should be able to expect in terms of returns for your investment portfolio. For this video, we are going to assume an 8% growth rate. That's because the stock market typically returns 10 to 12% on average for decades and decades and decades. And then once you take into account dividends and the inflation rate, then you come up with a very conservative 8% real return that you can depend on. Now, obviously, there are tons of ways that you can increase your performance. A lot of these I teach inside of Heresy Financial University. Things like active trading, things like hedging, things like asymmetric trading, things like basic portfolio allocation and rebalancing between uncorrelated assets. But while those things do have the potential to increase your returns, if you do them wrong, they also have the potential to decrease your returns. And so if you just want to be safe, say, hey, I just want the market averages, it's very easy. You just invest in the market. Some people in the market outperform, some people underperform, and it's a matter of skill. That's why the outperformers, some of them outperform consistently for their entire career. But the lowest effort way to do this is to just invest in the market. You ride on the coattails of all the bad investors, all the good investors, and you get the average. So for this example, and all of the numbers we'll be using in this video, we're looking at an 8% real return. That's after inflation. And if you do want to increase your skills at growing your wealth faster, shameless plug, check out Heresy Financial University, linked in the description below. Okay, so we covered time left, which is the amount of time you're going to be investing before you start taking from your investments. We also just covered the growth rate, and for the purposes of this video, we're going to be using an 8% real return, which is after inflation. Next, we're going to take a look at the next part of the formula, the annual addition number. Now, this one is the most controllable part of the formula, and it's actually, you'll see in the end, this is what we're actually going to be solving for in this formula. But the annual addition is simply how much money you invest every every single year. Now, even though this one is the most controllable of all of the variables, this is the one that people always find the most excuses for. And so in order for me to obliterate any excuses that you might have with increasing the amount of money that you can invest each year, we're gonna break down the annual addition into its own sub-formula, which is total income minus total expenses minus reserves equals annual addition. For the vast majority of Americans, you take your total income that you get from your paychecks, you take your total expenses out of it, which is gonna be your taxes, your mortgage, your gas, your food, everything you spend money on. You might save a little bit, so you're gonna subtract the amount you save, and guess what? Usually there is nothing left over. But all of these are actually controllable. And you can turn these dials of this formula in your favor in order to be able to invest more every year. So the first part is your total income. And the first thing you need to do in order to increase your total income is stop staying at garbage jobs. If your company is not rewarding you for the value that you are providing, leave. If that company gets into trouble, they will fire you without a second's notice. And they will not feel sorry about it. You are expendable. You owe them nothing. If they will not reward you for the value that you are providing, go somewhere else that will. Studies show that people who hop jobs every 2 or 3 years to different companies make the most compared to their peers. It does not pay to work your way up the ladder. It is not 1940 anymore. Number 2, recognize that there are very few jobs that will ever pay you enough that gives you a large enough income to be able to invest enough to retire early. Even things like doctors and lawyers, they require so much time up front in studying and so much money to get those degrees that your return on that is very low. Your expenses are very high. Similarly, C-suite jobs at large companies typically take many years or sometimes even decades working your way up the corporate ladder, that by the time you get there and have that large income, you're not retiring early anyway, because it took you your entire life to get there. Now, my recommendation is to start a business on the side, because then you actually control your income. Your income is determined simply between you and your customer, how much value you provide to as many people as possible. But I understand many people don't want to do that. So the second option, if you want an actual job working for a company that will pay you the highest amount of money and that is infinitely scalable, is sales. And I get it, a lot of people hate sales. But ask yourself whether you would like to work at a job that you hate for an entire career or a job that you hate for a few years. Most people would take the second option. And it's because sales is the only skill that can apply to any company, any industry, any sector, any economy. It is inflation protected because your compensation goes up if the price of the thing that you are selling goes up. And once you hone that skill of selling, you can hop to selling something bigger, something more expensive, something more high volume, and you constantly have something else that you can go sell and make more and more money. It is the only skill that is a job skill that is infinitely scalable. So of this sub formula for increasing your annual addition to your investing, we have just covered how to increase the first part of it, which is your income. Job hop, start a business, get into sales. Part number 2 of sub formula for increasing your annual addition is decreasing your expenses. Rule number 1 here is stop buying stupid garbage. That new car you want that you're justifying to yourself saying, oh, it's an investment, it'll save me money. My old car keeps on breaking and it has maintenance, or it's gonna start breaking. You're justifying this large expense, and guess what? You're never going to spend that amount of money that you're gonna spend on that new car in just fixing and maintaining your old car. It doesn't matter how many miles are on it. It doesn't matter if it breaks. If it breaks and you have to buy a new car, guess what? Then you have to do what you're gonna do proactively right now anyway. So don't do it until you have to. Stop justifying the things that you want by saying that you need them. Stop buying stupid stuff. The second thing you do to decrease your expenses is to decide what you're going to spend your money on before you get paid, and then just do what you said you were gonna do. Stick to it. It's called planning and integrity. You don't have to call it a budget. This is you making your future self free. This is not punishing yourself right now. This is giving a gift to yourself later. Number 3, don't carry credit card balances. Paying interest on literally everything you buy is stupid. It just makes everything more expensive. So don't carry a balance, pay it off every month, never pay interest. And if you're not disciplined enough to do that, just stop using the credit cards. You think that $400 per year in cashback bonuses is really gonna make you rich? It's not. And finally, if you really wanna level up, use a debit card for every single purchase, because it actually hurts. It activates the pain centers in your brain. It's less fun to spend money with a debit card than it is with a credit card. You will spend less money, I promise. And the last portion of this sub formula for increasing the annual addition to your investments is reserves. Because remember, the sub formula is total income minus total expenses minus reserves. So you have to take into account the amount of money that you are putting away for a rainy day into your savings account, your slush fund, your emergency fund. Saving is absolutely important. You have to do it because you have expenses that are denominated in dollars. They're not denominated in Bitcoin. They're not denominated in gold. They're not denominated in shares of stock or in real estate. People want dollars. And so if you want to be safe from an emergency, you have to have a little slush fund of dollars. But especially, I'm talking to millennials here, oversaving is a curse that will rot away your purchasing power. I can't tell you how many young high income earners I know who have told me, hey, I've got 50 grand in the bank, 100 grand in the bank, 200 grand in the bank, 300 grand in the bank. And I've been watching for the last 2, 3, 4 years, waiting for an opportunity to invest. I wanted to buy real estate or stocks or something else. And prices have just continued to go up and up. Meanwhile, inflation has been eroding my purchasing power. So not only have my dollars been losing value, but I can't even buy the assets that I could have bought before. And now I'm terrified to invest because it looks like things now might be at a top. And if I choose to put my money in investments now, then I might watch it all burn. Yes, it is true. You have to save dollars because you have emergency expenses that you'll need to use dollars for. But once you have 3 to 6 months worth of your expenses in a savings account or a money market fund, do not save a penny more. Every last dollar after that gets invested. Otherwise, you are only hurting your progress. Okay, so the annual addition portion of this formula here is the amount that you invest every year. And the way that you increase that is by increasing your total income, decreasing your total expenses, and you stop saving once you have a fully funded emergency account, about 6 months worth of savings. Which means that the only variable left on our freedom formula that we need to look at is the freedom number. So what in the world is your freedom number? Well, very simply, it is the dollar amount that you need in order to stop having to work. Now, hear me out for a moment. I chose those words very carefully because I truly believe man is made for work. We have a mission. We are put here for a purpose, to be productive, do meaningful work, make the world a better place. So when I talk about building enough wealth in order to retire early, I'm not talking about sitting on a beach, sipping pina coladas, getting fat and lazy, burning in the sun for the next 20, 30, 40 years. Instead, it means getting to do the work that I want to do, not having to do the work that somebody else tells me to do simply because I need the paycheck. Slaving away in a cubicle for terrible pay, for an idiot boss, doing meaningless tasks for a useless bureaucracy for the next 5 decades until I'm on my deathbed is not my definition of productive work. Yes, it might pay the bills. Yes, it might support my family. But if I have the option to try and build something else instead and take action towards starting to do work that is a lot more meaningful and impactful, I'm gonna do that. A lot of people listening right now are probably thinking, well, that sounds nice, but the best part is this is not a subjective feeling we're shooting for. We've got hard math. We're looking at objective numbers. Let me show you what I mean. For most people, your freedom number is gonna be somewhere in the neighborhood of $3 million. And before you shriek and disregard the rest of the video thinking, well, that's unobtainable for everybody, hear me out. Let me explain why 3 million and how to get there. If I give you $1 million today and tell you you are allowed to spend $50,000 of it every year, don't pull up a calculator. In your mind, think, how long will that last? If you spend 50 grand a year from $1 million, it'll only last 20 years. 20 times 50,000 is $1 million. And 50,000 is less than what most households spend every year. So even if you became a millionaire overnight, somebody handed you $1 million, it would not be enough. But if that is true, how is $3 million enough? And the answer comes from the formula that we are looking at, which is our growth rate, because we are not just looking at a cash pile, this money is invested. And if you grow your money at 8%, like we talked about before, you can very safely take half of that growth every single year, which would be 4% of the pile, and you never touch the 3 million. 4% of $3 million is $120,000, which means that you can take $120,000 as income from your wealth pile that you have built, and that is only taking half of the growth, which means at worst, it won't decline. At best, it'll keep on growing. Now, your number might be higher. It might be you need $500,000 a year to live. It might be lower at $50,000 a year to live. So you need to find your own freedom number, and here's exactly how you find it. You take your annual expenses, let's say $100,000 a year, and you divide it by 0.04, which is 4%. If your expenses are 100 grand a year, dividing that by 0.04 gets you $2.5 million. Now here's the other thing to note. If you're anything like me, like I said before, retirement doesn't mean laying on a beach for the rest of your life sipping pina coladas. It means doing the work that you want to do. And most of the time, that work is going to provide income for you. So if you want to be a little bit more aggressive and say, hey, I'm planning on doing work that will make me a certain amount of money, you can take that into account, which means the wealth pile that you need in order to retire may only be 2 million or 1 million, potentially even less. On the other hand, this is very important. If you plan on traveling and exotic experiences and giving to charity and spending a lot, you need to be very realistic about how much more money you might be spending every single year and plan accordingly. Okay, so recap of the equation. Time left is the amount of time that you are going to be investing before you start to take money from your pile of wealth. The growth rate is the amount you can expect to earn after inflation on your portfolio every year. We're going for 8%. Annual addition is the amount of money that you are going to need to contribute to your investment pile every single year, given the amount of time you are trying to reach your goals in. And then finally, the freedom number is the number, the total dollar amount that you need to produce the income that you need. For these examples we're going to look at in a moment, we are using $3 million. All right, so this is coming together. We are putting the plan together. The only thing we are trying to figure out is how much money do you need to contribute to your investments every year. We know that the growth rate is 8%. We're going with the number for your freedom number at $3 million, which means that all we have to do is plug in some hypothetical time frames here, and that will automatically produce for us the amount of money that we need to contribute or invest every year. Let me show you what I mean. The first example we are going to look at is a 5-year time frame. Whether you are 65 years old and you need to get this done as soon as possible, or whether you are 25 years old and you are just shooting for the stars here. 5 years is an extremely aggressive time frame in order to get from 0 to $3 million. And again, for your own math, you might only need $1 million extra. You might have a pension already. You might have a 401k. You might have something already. So take that into account. If you need to get to $3 million in 5 years at an 8% growth rate, you need to contribute $500,000 every year to your investment pile. Now, obviously 5 years is almost no time at all, which means that there is very little time for compounding interest to work its magic here. It means almost all of that $3 million at the end just came from the amount of money that you invested. It didn't come from the growth. Now you might be sitting there thinking, well, this is ridiculous. This is not possible for almost all Americans. And sure, you might be right about that, but I'm not talking to every American. I'm talking to you. If you want to get from 0 to 3 million in 5 years, it takes 500 grand a year. Is it hard? Yes. Is it doable? Yes. You'll need to be doing one of two things. You'll either need to be running your own business so that nobody but you and your customer can determine your income level. If you're making 100 grand a year at a large corporation that gives you a 4% raise each year, that's not going to cut it. Or you could work in sales. Yes, you will have to start off selling something that is not high ticket or not high volume, but get very good at sales, and you can start hopping to selling things that pay you more, higher ticket or higher volume. Okay, so 5 years seems unreasonable to you. Next up, we're going to take a look at doing this in 10 years. If you need to get to $3 million from 0 in 10 years, and you are assuming an 8% real return, the amount of money you must invest every year is $200,000. Now, again, this might seem preposterous. Who in the world could invest $200,000 a year when that is higher than most household incomes? Well, what I said before still applies. You will need to do something different than what most Americans do if you want to achieve something that most Americans do not. Although this one is a lot more achievable because all you need is 2 high-income earners in the same household. You live off of one of their incomes and you invest the other one. Doctors, lawyers, dentists, executives, you have 2 high-income earners in the same household. You're gonna be pretty dang close to this. Next up, let's take a look at doing this in 20 years instead. So if you need to get from $0 to $3 million in the course of 20 years at an 8% growth rate, you only need to contribute $62,000 every year. Now, 62 grand a year, you might be looking at that and still thinking, man, that is crazy. But when you break it down, that's only $5,000 per month, which means if you have 2 pretty normal jobs in a household, one of them can do this by itself. Yes, you're going to have to eat dirt. Yes, it's not going to be comfortable. Yes, you're going to live a lower lifestyle than your peers and the people around you. But while they are looking rich and feeling rich, you will actually be becoming rich. And then finally, the plan that pretty much any person in America can do if they put their mind to it is the 30-year plan, which is only contributing $25,000 per year or a little over $2,000 per month. Even a single income household, as long as you are in a relatively high paying job, can accomplish this no problem. Maybe you can't quite hit $2,000 a month yet, but if you focus on increasing your income and decreasing your expenses, you can get to this pretty quick. Now, for some of you watching right now, you feel liberated. It's just math. It's just a numbers game. If I want to do it in 5 years, here's what I have to do. If I want to do it in 8 years, here's what I have to do. Hey, maybe I don't need 3 million. Maybe I only need 2.5 million. It's just a numbers game. Once you figure out what your numbers are, now you have a plan. Get after it. But for others watching this, you feel discouraged, almost hopeless, maybe even envious or jealous, looking at the world around you, looking at the cost of living, looking at expenses, looking at the people who are in positions of power, looking at people who have inherited things and gotten a much easier life and situation than you. And guess what? All that might be true. It might not be your fault that you're poor, but it can only be your responsibility if you do want to become rich. When I started my career as a stockbroker, I had zero financial education. My wife and I were in a ton of debt, and I started off making $40,000 a year with my wife at home and our brand new newborn. Things were extremely tight. Like, we had to shop at multiple grocery stores for the sales and get the coupons just to be able to afford groceries every month. 5 years later, I was making $250,000 in a sales position, and the guy sitting next to me was making $500,000 a year. At that point, that was more money than I ever thought that I would ever make in my life, but I was miserable. And we were well on our way. That was a path I could have stuck to and retired early. We were doing all the right stuff, saving, investing, keeping our expenses low. But I just couldn't keep on doing what I was doing. That's when I quit and I started Heresy Financial, essentially starting over. Friends and family worried about me, asking other people around me if I was okay, not being able to understand why would you leave such a good job with such good benefits, such a good company, such high pay. And from their perspective, they were right at the time. I left all that just to start making some YouTube videos. And they were right for a while too. It took me 6 months before I made my very first dollar. And it was another year after that before the business was making enough money to pay our bills. So I went a year and a half without making enough money to pay our bills. And that would have never, ever, ever been possible if we hadn't saved and invested and kept our expenses low while I was making good money as a stockbroker. And now, a little over 5 years after starting Heresy Financial, I now have a personal income of 7 figures per year. Not business profits, personal income. So when I talk to people who are miserable in their job or not making enough money or want to do something more meaningful, I'm simply speaking from experience. Learn a high value skill, then learn sales, then probably start a business on the side. Don't quit first. Pick a product that other people have sold successfully. Don't try and start something new or reinvent the wheel. Do it yourself, do it better, put your own spin on it, and then tell people about it. Because nobody can buy something from you if they don't know you exist. You can run paid ads, you can make free content on YouTube or social media, you can go knocking on doors, you can even buy phone number lists and start cold calling people. Now, you know, obviously my preference for marketing is free online content. I make these YouTube videos all the time, I put stuff on social media, but you do whatever works for you. More importantly though, do whatever it takes. Promise you it's worth it. Obviously, everybody wants freedom sooner rather than later. Good news is you can control it. You may not be able to get exactly what you want right now, but you can start working towards it. And I bet you if you do, it might come sooner than you think. One little last drop of hope to get you going is the fact that there are 22 million millionaires in America today. That's almost 10% of our US population. 22 million millionaires. Do you think they all have something you don't? They are literally made out of the exact same ingredients you are. The only difference is they have done something that you haven't done yet. They've either done it with a small income over a long period of time or a large income over a shorter period of time. If they can do it, and if I can do it, you can certainly do it too. Learn the skills, explode your income, keep your expenses dirt cheap, and invest as much as possible. And again, if you want me to help you apply these ideas in your own life, click on the link in the description below. As always, thanks so much for watching. Have a great day.